This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome, and this is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 8/25/20. This is show number 104. Well, Nick, I think it should be sell on Monday and go away till next Monday, right?
Yeah, that's kind of the way it works these days. We've seen this pattern repeat over and over and over. Seems like every time we have a Monday rally, we do a lot of backing and filling the next few days. So, again, that seems to be what's happening at the moment. You do have the major indexes lower with the exception of the NASDAQ today, which is just up 4 points. So markets are a little bit lower, and we'll see how they play out. One thing I will say, the volume is very, very light, and that is favorable for upside. So we'll see who wins today. But either way, I wouldn't be shocked to see some backing and filling after yesterday's big up move.
Yeah, so headline of this show is "The Dow is dead, long live the Dow," right?
Yes. Well, you know, there was news last night. There was some reshuffling announced for the Dow Jones Industrial Average as it looks like a few stocks are going to be removed. Salesforce is going to replace Exxon. Amgen is going to replace Pfizer. And Honeywell will replace Raytheon. And that's in the Dow Jones, which is price cap weighted index of just 30 companies. So you have to remember when a stock like Apple, which trades around $500 a share, splits 4-for-1, that's going to affect the Dow. And it looks like that's why they went ahead and made this move and added these stocks and took out these old stocks like Pfizer and Exxon Mobil, so that have been non-producers. So they don't want to lose the effect in the Dow once Apple splits, because remember, it's price cap weighted. So now Apple becomes a $125 stock as opposed to a $500 stock. They have to adjust for that. So it looks like there's some reshuffling going in there. And those stocks that are getting added and are doing pretty well today. And it looks like the official date for the change will be August 31st. So coming up, end of the month.
So it's kind of like a Tesla effect on these stocks because they're getting added to an index that still is respected, even if it's not as relevant as it was 100 years ago, or actually it's like close to 150 years that the index has been around, the Dow Jones Industrial Average. I guess it was Dow, who was the founder of the Wall Street Journal, created that index, and it's a very simple, like you said, non-weighted index. It's not weighted by market cap, it's just weighted by stock price. It's a very humdrum index that really doesn't tell you anything when you get down to it, because the biggest companies in the world aren't on that index, like Apple, like Amazon.
Well, Apple is on there.
Oh,
Apple's on there, and Goldman Sachs is on there. They were recent additions last couple of years. But that's precisely my point, because Apple's going to split now from $500, probably going to be a $125 stock or around that level on the 4-for-1 split. So that will hurt the Dow, because now the Apple doesn't carry that same weight. Remember how Boeing was such a big stock, and Boeing would sometimes moves the Dow 50 to 100 points. Now Boeing at $174 doesn't carry the same weight when it was $400. So I think that's the reason why they're doing, because this is a price cap weighted index, not a market cap weighted index.
Amazing what a little global economic collapse will do to the former market darlings, right?
It really, yeah, it's amazing.
Hey, so we got one of my favorite stocks. It's I have a love-hate relationship with them as far as a consumer goes. Talking about Best Buy, BBY. On the one hand, they got stuff there that you just can't find, otherwise have to wait 3 days to order off the internet. But on the other hand, they're always trying to help me, and I just want to be left alone when I go in there.
Well, today they reported, or I should say this morning, they reported earnings, and the earnings were actually pretty solid. I'm not a big earnings guy. I don't really look into the overall numbers, but one thing I will say, the chart was parabolic, and the stock today is selling off a bit from that big rally that it's had recently. It's only down 5 and change, was down more earlier. So again, I think traders, should just take note When a stock goes parabolic and it has its earnings report, it's basically priced for perfection. And in this case, it was simply a sell the news event. So this is a perfect reason why you don't want to trade in front of earnings, especially when stocks are parabolic, because the odds of them going up after the earnings announcement is slim. Not to say that they can't or they won't, but it's very, very slim and it's risky. So good pullback today for Best Buy. This is a stock I think traders now would want to wait on for several days to a couple of weeks, and then you can reevaluate it.
Yeah, interesting. And like you said, you shouldn't trade in front of earnings because you could be catching a falling knife. When the earnings are great, the stock could have unpredictable responses, right? Especially if you're doing it around options X, like last week. So interesting the way that stocks behave counterintuitively, seemingly counterintuitively, but not really.
Yeah, once you understand what makes these things move and what makes these things tick, and that's why I always tell everybody, just learn the charts, find out what these charts are all about. It takes time. It's not an easy thing to do, but everything is in the charts.
Hey, so one thing we should talk about is the S&P and the NASDAQ have made new highs. The Dow and the Russell have not, and perhaps that's another reason for the shuffle. But the sector, I heard somebody going down a list of all the sectors and how they had performed respectively, and the financial sector was down the most still from its March, before its March crash, from its February highs. I think it was down 20 some odd %. And now it looks like they're starting to go higher.
Yeah, well, yesterday the financial stocks had a really, really good day. For the first time in a long time, we've seen that. You could look at equities like JP Morgan, Bank of America, Citibank. You'll get the ETF, the KBE, which represents the big bank stocks. They all closed nicely higher yesterday. Today they're starting out strong, but they've already faded a little bit today. So, again, we want to see if how they react into the close. But if the financials start to get a bid, that's very, very good for the market. If the financials lag, that's obviously always a heads up or a wake up call to say, hey, things may not be so rosy out here. And again, I'm going to be watching the financials and see what they do today into the closing bell. I've already did some charting on this stuff last night. I think I know the resistance points, but I really want to see if this index or if this industry group could start to show some leadership. If they can start to show some leadership, that tells you this market, might have legs going forward a little bit. But if they don't, it's a little bit of a shot across the bow. You got to be on caution mode.
Yeah. Well, I think caution is the byword in this market anyway, right?
At this stage of the game with the election, basically under I think it's 70 days or less than 70 days. You definitely have to be on guard right now. There's a lot of geopolitical events that are taking place right now. And I think everybody, has to be a little bit cautious at this stage.
Hey, and, going back to China, to the Three Gorges Dam, the flooding there's been 5 waves of flooding. In effect, the floods have never stopped, but there are these waves of flooding because the dams get to a certain level, they have to discharge, and they just discharge, and downriver gets hit. We're at the 5th wave now. No let-up sight. Can you imagine if this dam gives out? That has got global ramifications.
It really does. I've actually looked into it. You've turned me on to it. And to be honest, I look at it and it looks as shaky could be. So, that's another domino that could set things off here. So, again, we definitely have to keep an eye on that.
Yeah, for sure. That's yet another thing. But you can't spend your life trying to see what's over the horizon, get obsessed with it to the exclusion of what's going on now, because you miss out on a lot more worrying about the future. Just keep it in mind that this is going on and could have profound effect on not just the markets, but the world.
Absolutely. There's no doubt about it. You got to remember that the supply chains that come out of China are enormous, and that's a big country. If that dam breaks, that whole country will be affected beyond anybody's imagination.
Yeah, and that's what we tried to do by putting out that video. It's actually the first of many videos that wound up hitting YouTube, and take a little responsibility for that. But in any event, here we are with our market, Nick. And one thing I wanted to ask you was housing. Where are we right now with housing?
I got to say, there were some housing numbers out earlier today. They were actually pretty strong. The one thing I will say, though, about the housing stocks is that they're overbought at this stage of the game. So we got to be a little bit careful. They've gone parabolic as well, along with a few other industry groups. But, housing, we talked about housing for a while now. And when you look at the housing stocks right now, they're a bit overbought. The trend is up, so they're going to need to work off an overbought condition. They're still very, very strong. But at this stage of the game, I think they're a little bit too extended, a little bit too overbought for my liking at this stage. But they still are still in a very, very good uptrend at this point.
All right. So housing, do you think we missed the boat on housing?
We've missed it a little bit. Yeah, we've missed it. But again, you let it pull in and you see what kind of pattern you get. Again, you're not going to catch them all. This really took off like nobody's business when it really broke out. I was waiting for it to consolidate a little bit more. And sometimes those things don't wait for you. So the bus left the station without me on this one, but it's been very, very strong. And we've talked about this putting in a good pattern for a long time. But at this stage of the game, it's very, very overbought, a bit extended on the charts as well.
All right. So what isn't overbought here? What sectors are you really paying close attention to right now?
Well, the financials are not overbought. They're an area where I would pay a lot of attention to. Also, if you look at, say, gold and gold miners, they're working off their overbought condition. If you look at a lot of the biotechs, they're starting to work off an overbought condition. So there's going to be opportunities in all of these areas, even healthcare names. Didn't go parabolic, but they're pulling back now. So these are some areas where I'm starting to really chart it out and see where the opportunities are going to arise. Now they still may need some more downside action to take place before they become opportunities. But that's what I always do. I look for things on sale. I never buy things up at the highs. I never buy things when in the stratosphere. I always look for things that are representing value, and that's what I like to get into.
All right. Well, I think we'll leave it at that. Make sure you go over, visit Nick's site, inthemoneystocks.com, for his trading record. A lot of other valuable trading info there. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Questions, comments, we answer all. KL@KerryLutz.com. And Nick, we will pick up tomorrow.
Sounds good.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.